In
Right.
2017, we were in the midst of a 6 year downdraft bear market in precious metals. And strangely enough, um, central banks who you would think would want to have gold as a foundation of their wealth had been selling gold for the previous 5 or 6 years from its peak in 2011 to 2017. That 6 year pattern, or that gap rather, of 6 years was a bear market where, in my mind, not only were we in the midst of capitulation by the public, we were seeing selling by the central banks, which never made sense to me. And then out of nowhere, the German Bundesbank led a an exodus, if you will, out of the New York Federal Reserve. They publicly said, look, for the last few years, we've been requesting our gold back. We demand you send us our gold back in 2017. We want possession of it. It really caught my attention because banks were selling gold, public was selling gold, it was downdrafting, Bitcoin was taking off, the equity markets were doing good, and people just wanted assets that would return a yield, pay a yield, and gold and silver were being forgotten. So Germany asking for their gold back got my attention. Well, it really started to get my attention moving forward. Within a month or two of that, the Dutch National Bank, the Bank of Austria, the Czech National Bank, the Bank of Poland, the Bank of Hungary, the Bank of Turkey, all of these banks said the same thing to the New York Fed and the Bank of England. Hey, you've all been holding our gold, ship it back. Not only that, that year, those same central banks the following year, 2018, those same central banks bought more gold as a group together than they did in the 60 years previously combined. So they go from net sellers and no one buying to repatriating everything and massively accumulating it. The following year, in 2019, those numbers were up 100% yearly. So you see huge purchasing of gold, and then the first major piece of this puzzle came together. And this is kind of what we're talking about, perhaps, or at least the seeds of it. And that is the Bank of International Settlements called gold the world's only other tier one reserve asset, a high liquid asset that is valued the same as cash. And since the end of World War II, it's been dollars and US treasuries that had this designation. And now they have a partner, and that would be gold, which is now revalued as a riskless asset as far as the central banks are concerned. So it became obvious to me that the central banks who repatriated their metal and who massively accumulated it had been clued into the fact that gold was going to be revalued as a riskless tier one asset. With that being said, we fast forward, and there are things we can talk about once we get into this, what happened throughout the subsequent years. But if we fast forward to where we are right now, we can talk about an article that was written by Reuters and by Bloomberg last week, which said the central banks of the world bought 399 tons of gold this last this last quarter, third quarter, which is about $20 billion worth of gold. And it's 340% higher in terms of accumulation than it was Q3 2021, almost double the previous record of 241 tons in Q3 2018. It marks the 8th consecutive quarter of net purchases by central banks, and year-to-date total of about 675 tons. Now, the year's not over yet. There's 4, 5, 6 weeks left. That amount is higher than any other year on record since 1967. So the central banks, since 2017, have been quietly and massively accumulating gold, which is now levied to a status that is on par with cash. It's riskless. And if you realize that price is an ultimate tool of misdirection, there is no question in my mind that the big money is following exactly what you are saying. They are massively accumulating gold and silver. They're pulling it off of the exchanges, I'll get to in 1 second, because they are front running what is coming, some sort of a revaluation, I believe. So dig a little bit deeper into that. And when you talk about what's been going on the epicenters of precious metals, which further, look, why I'm going into this big diatribe is that value and demand is disconnected to price, or has been for quite some time, and the big money has been doing that purposely. Let me explain why. The LBMA, the London Bullion Metals Association, their vaults have been massively contracted. And when you take a look at the amount of silver inside the LBMA, there's roughly 300 million ounces total. And that's silver that is not pledged to various ETFs and whatnot. The withdrawals coming off of the LBMA are record-breaking. Last month, over 45 million ounces were taken off of the exchange. And I mean taken off like goodbye, one-way street. No liquidity, because you're pulling them off the exchange where they're validated and in the ecosystem. They're leaving. We don't know where they're going. Are they going eastward? I surmise they are. But the bottom line is, if we see these kinds of withdrawals, which to right now, you guys, marks the lowest level of silver inventory in the history of the London Bullion Metals Association since they started keeping records. So it's being bled down. Price is being used to misdirect the public so that they can siphon all the metal off. If it continues at this pace, by mid-2023, there will be nothing left on the LBMA. And how about the COMEX? On the COMEX, the registered category, which are the bars that are available for immediate delivery, are somewhere in the neighborhood of 34 million ounces, which is a bleed down over the past 18 months of 70%. That's roughly 7,000 contracts that could stand for delivery. And if we looked at last month's open interest, the number of contracts that could stand for delivery, the bars backing the entire price setting mechanism of the world represent roughly 1/18 of the amount of paper that is out there. In other words, there's 1,800% more paper than there is bars backing in terms of the word rehypothecation. What I am getting at is that whether you're talking LBMA or COMEX, whether you realize that less than a month ago, in one day, 45% of all the kilo COMEX bars for the mini contracts, 26 million ounces nearly, gone. One day. Who's got that kind of bread to pull off the exchange and take it out of the exchange, away from the COMEX ecosystem where it has no liquidity? Because if it comes back, it has to be reassayed. Once it COMEX, this is going bye-bye, one-way street. In one day, 26 million ounces are taken off COMEX. 10 days ago, in one day, 4% of all the 100-ounce gold bars were taken off of COMEX. The deliveries that we are seeing in COMEX, in the London Metals Exchange, the bleeding down of the ETFs by the authorized participants who can quietly siphon metal out, and the rest of us can't, tells me exactly the question that you asked me, and in a very roundabout way, and I apologize for that. It is simply this, that price is being used and rhetoric to misdirect the public, while the smartest, biggest money in the world is no-look passing or misdirecting the public into believing that gold and silver are relics of a day gone by, and they are massively accumulating it and pulling it off of the exchanges, which is the delineation here. Accumulating it and leaving it in the ecosystem is one thing. That's still bullish. Accumulating it and pulling it out of the ecosystem is very telling to me. That says that the biggest, most sophisticated, well-funded, well-informed people on the planet are using the suppressed, leveraged COMEX price to accumulate everything, make the shelves bare. And the crazy thing about it is that from the wholesale and retail markets down, it all emanates from the LBMA and the COMEX. You bleed those dry, and everything underneath it is going to be just fighting for scraps. So yes, there will be a repositioning or a revaluation. And the reason I believe that is that the biggest money in the world for the last 5 years, where price would dictate why would you be doing this, has been stocking their own shelves in preparation for said revaluation, which I have been saying for 2 years is most certainly coming.